There's only one thing that's causing all this chaos in the market, and you need to know what it is. All right, so can we just talk? I need
Sure.
to talk to somebody because I'm just like so frustrated. I can't even tell you.
Yeah.
So let me tell you why. And I'm sure everybody listening, everybody watching, and they're probably feeling the same way. The fundamentals of the stocks that are on the stock exchange, meaning their earnings, how they're doing, their profitability, have been solid. So the fundamentals behind this entire market were so strong until somebody decided, let's change that. And they went after Iran, and now we have oil. And now we're watching oil go up and up and up. And sometimes it comes back down. And when it comes back down, that's when we see the markets go up. Is that correct?
That's absolutely correct. And it's correct because of all the leverage between the oil and everything else in the market, Susie.
All right, so here we are. Oil is at its high since July of 2022.
Yep.
Right? Everything now seems to be simply dependent on one thing and one thing only, and that is oil, in my opinion. And when we have a market that is absolutely being destroyed in so many ways based on one thing known as oil, what do you tell people to do now, Keith? What do we do?
Well, there's two things. Stay in if you can. Number two, remember that psychology is driving all this. The businesses are great. In fact, the business case for owning many of these companies is getting stronger. So what you got to do now is imagine you're on a boat out to ocean. The waves have picked up. If you jump off, you're going to have a problem. You just got to wait this one out.
But it's so easy to say that.
I know.
It's like, I'm going to wait it out. But here I am. Many of my tech stocks are down 20, 30, 50%.
Mine
some
too.
of them.
Yep.
You have some stocks that are down 5%, 10%. You now have the NASDAQ, the Standard & Poor's, all essentially pretty much in correction territory. You have gold that has absolutely lost at least $1,000 an ounce. You have Bitcoin that has no ability to do anything but go down, especially in the case of war. So where do people run or hide? Because it kind of feels like to me, there's no place to go. There's nothing to do. So what should they do?
Well,
Besides just keep what they have.
Well, respectfully, I'd push back on that a little bit, and here's why. Is a company like Chevron, which we, of course, talked about for months and months and months leading into this, is a global producer with dinosaur juice that we're going to need for a very, very long time. It's got a great dividend, and it's very stable. So if you're freaked out because all of your tech has gone one direction, you can balance that like a little kid's teeter-totter on the playground with a stock like Chevron. Or you can go into something like SGov, which is short-term U.S. Treasuries. Super safe, great yield, not going to go anywhere. You can sleep at night. So there are still choices, even though the ocean's getting a little bumpy or a little spicy.
So I just have to go back to the Chevron because that was your number one energy pick.
Yeah.
And the last time that you were on, you said, it is my number one. It was about 189, 190. Maybe the next Monday, whenever it came on, it went down to 187. And all these people, not all of them, but if it's one, it was too many. They said, no way are we listening to the two of you. How can you be buying something at its high? You don't buy it at its high. You wait till it comes down. And now here we are. And where is it as the close of Friday?
Oh, it's up in the 200s.
Yeah, so last I looked at it, it was like 206, 207, 208. It's trading right in there.
Yep.
Still with a decent sized dividend.
Yep.
So when people look at their stocks and they go, oh my God, it's so high. It's so high. I have to wait until it goes down. Can you just tell them what a big mistake that is and why?
Sure. Take a look at a chart. Pick any stock you want, just any of the household names that we've talked about, any of the stocks you own. Zoom out to 20 years and tell me that that chart doesn't go high to low, low to high over that time period. So it feels bad at moments in time, But when in doubt, you zoom out and you take a much bigger picture, because a quality company is going to be there when you need it, regardless of the short-term noise. And that's the perspective that so many people miss. You've got to just simply relax, look at that bigger picture, because many times, for example, in early 2000, Amazon lost 97% of its value. That's incomprehensible to people today. They simply forget their history. We're going to get through this, and stocks like Chevron, which people argue about with me till they're blue in the face, continue to go up over time.
So I hear you. Maybe a few people that have time on their side and everything, and they understand all this, hear you. But the majority of the people are like, stop telling me to zoom out. Stop telling me just to be patient. I'm totally freaked out. So you know how at the end of last year, Keith, we had a thing where we were telling everybody, in 2025, we think that the Standard & Poor's is going to end up at like 7,000, 7,400. We were so optimistic. I'm having a hard time being optimistic right now. I understand holding on to everything we have. I also understand that this whole market is based on oil, and it was just announced on Friday that chances are we're still going to be there 2 or 4 more weeks. We have thousands of soldiers going there, all right? So if you look at the markets right now and they continue like this, and you see oil at 120, 125, where do you think the downside could be at this point in time? I personally think it's really easy to see the Standard & Poor's down at about 6,000 when it's at 6,300 right now. What do you think?
Well, I think that's not impossible either. And the trick is the selling is going to continue until all the leverage exhausts itself. That's the unknown here. It's not the politics. It's not the individual in the White House. It's not the conflict. It's the fact that Wall Street is doing what's called resetting risk, Susie. They're simply looking around the globe and going, where's the certainty? And it doesn't exist right now. But the certainty, if you and I look at it as investors, is the individual companies, the Chevrons of the world with the great earnings, the dividends, the S-Govs of the world, where we can park our cash, stash it for safety. That's stuff we can control rather than worrying about the stuff we can't. And it's hard.
You just said the word certainty. And the reason that these markets don't go up and stay up is people are buying because of what we both call FOMO. They are fear of missing out.
Yep.
They are afraid of missing out.
Yep.
And so they see it go down a little, and then they go, they've got to get it, and then it goes up, and they go, I caught it, and then it goes right back down. Right. The trick, everybody, and tell me if you agree with me, Keith, is that once things are certain, and people really feel like, oh, oil's calmed down, this has happened, whatever it is, and they're buying because it's a good investment. They know what's happening out there. Don't you think when that eventually happens that we probably will see these markets skyrocket again?
Oh, there's no doubt. I agree with you 100%. When certainty returns, we're going to get a rip-your-face-off rally, and everybody who thinks they're being smart by stepping out right now is going to get left behind. So that's really the trade-off you got to make today, is how much do you want to risk that FOMO versus a logical, controlled investing process over time, even if it scares the snot out of you.
And it's not just oil.
Right.
Look at what happened to bonds.
Right.
You have a 10-year treasury now at 4.4, 4.5. You have almost a 30-year at 5% again. What does that indicate to you, and what would you be telling people to do when interest rates are getting higher like they are right now?
Well, the logical trade-off is that's when you start looking at, do I want to stash my cash or do I want to continue to take risk? What it really is not just yield on your money, it's a reflection of global risk. And right now, global traders, not investors, traders, and there's a distinction, are saying, oh, it's risky. But investors are saying, okay, I can do something with that 4 and something percent. That's good to me. I can get a return on my money as opposed to a return of my money, which is what traders are concerned about.
And so here you are. We talk about stocks a lot.
Yep.
But we also have to talk about something that almost everybody has, which is real estate.
Oh, yeah.
Do they sell? Do they buy? And the truth of the matter is, everybody, oil affects everything, and you have really got to get that.
Yeah.
And it also affects the lumber, everything that you're using to build homes, to renovate, and all of those things. When you combine that along with interest rates being higher because when the 10-year goes up, guess what else goes up, everybody? Your mortgage interest. So if you're looking for a new mortgage right now, remember how just a little bit ago, Keith, we were like, 5.55 right in there for a 30-year. Now we're back at almost 6.5, and it's going to go higher.
Yep.
So would you be an investor in real estate right now? And if so, how would you be investing in it?
Oh, that's a great question. It actually is going to bring me right back to a favorite choice of yours and mine, Care Trust. It's a real estate investment trust. Kicks off great income, but specifically, it's a specialized trust that cares for medicine, recovery care after surgery. So as we all get older, as we all need medical care, this is one of the few areas of real estate where you have a very dynamic yet calm, placid, dependable approach going forward. It's much better than individual real estate, in my opinion, at this point.
You have to look at everybody. What's happening in the United States is we're getting older and older and older. So if you're going to go into an REIT and you want a good dividend, do it in an area that's not going to become obsolete. Now, obviously, technology has absolutely been obliterated, not just 5%, but 30, 40%. If you had a number one technology pick right now, what would you be picking?
No question about it, Microsoft.
All right, now Microsoft's been obliterated just again on Friday. It's been obliterated every day.
Yep.
Tell everybody why that would be your number one technology pick.
Because this is a stock that is on the cusp of transforming our planet. It's a stock that billions of people depend on to bring them together. It's not just about the software anymore. It's about the AI. It's about the working together. It's about the data transmission, the data reception, how you can process stuff, the co-pilots it's rolling out. This company has its fingers in so many different pies, all of which are essential to our world. It's got a global footprint. You know, it's being thrown out with the bathwater right now, and that's a function of the large traders, because Microsoft itself is financially very, very sound and very, very capable and growing rapidly.
And so if you're going to be buying Microsoft right now, you don't own any of it, how would you stage into it?
Well, I would buy a little bit at first, and then I would very carefully, deliberately take whatever amount of money it is. I'd look out 12 months, I'd divide it by 12, and I would invest that amount per month religiously, up or down, doesn't matter. Grit your teeth if you have to, smile if you want to, but consistently over the next 12 months. Just split it up. Slow down your buying, but continue to dollar cost average in, because that is how you make this kind of volatility that's scary and nasty actually work for you.
And this isn't the time to be, I'm not going to invest anymore. I'm not going to do anything. I mean, I told you yesterday I bought a little bit of a stock, went down more today. Right? Probably I should have bought a little bit more today, but if it goes down again on Monday, I'll buy a little more. And when I say a little, sometimes even if all you have is like 2 shares, enough to buy 2 shares, it's still something. Because go on, what were you going to say?
I was going to say, that brings up something. We said we're going to talk, right? That's one of my favorite tricks of all time to stay in the markets. I learned this from my grandmother, right? So on days where this stuff really hits the fan, you're terrified, you're uncertain, I will often buy a single share of something, just one share, because either that's the money I had available to me when I was young, or even today because it helps me stay in the game, because I know I'm playing to win. And so even one share psychologically is more valuable than any of the nonsense or any of the news or maybe even the stock itself.
Yeah, so I'm still an investor.
Me too.
But I'm still watching. But there's so many people really that are just so frozen right now. And what I really wanted everybody to understand is this really isn't about the stock market.
No.
This really has almost nothing to do with the stock market, everybody. Before Iran, and we'll let Keith reiterate this, how great were the earnings, the fundamentals, everything, just looking at the stocks and the companies themselves, almost all of them. How great were they?
Well, 92% of them reported earnings and EPS surprises of 70 some odd percent of the above expectations. We had a blended growth rate of 14% for the S&P 500. We had growth rate that were averaging upward trajectory in terms of the ratings that analysts were assigning to them, The CEOs were very positive. So if you look at what that fabric looks like, it was growth, it was positive, it was things that you want to hear. So it's all the headlines and the social media and the angst that has really clouded things. And I think it's a very tough spot to be in. It's scary. I mean, I'm a parent, I'm a husband, I'm a father. I feel all this angst too. But that shows you're human and you're paying attention. So one of the things I've learned over the years, strange as it sounds, is whenever I get to feel like this way, it means I got to lean in because it means there's opportunity. And again, I've learned that lesson the hard way. I thought I was being smart. I bailed out. I made mistakes. I lost money. But if you continue to lean in when you feel that way and you get uncomfortable, I've learned that that's a heck of a lot more profitable if you can do it.
So if you just heard all those numbers that can drive you crazy that you just said, all right, and you could understand that the companies themselves, we'll see what happens next earnings season, but the companies themselves fundamentally are strong right now. And really the culprit that has pulled out the rug underneath every one of these stocks, the stock market, the treasury, everything is oil. It all, in my opinion, boils down to oil. And do not be surprised if you don't see oil continue to go up and up and up. And it will not be until this is solved. You'll have to tell me if you agree, Keith. Until this problem is solved, that you're going to see a stock market that has a clue of what it wants to do. What do you think?
Agreed, agreed, and agreed. And when that happens, the prices are going to crater so fast, people's heads are going to spin, which of course means the stock market is going to go the other direction. So we'll all get to smile and relax a little bit when that happens.
So hopefully everybody subscribes to your 5 with Fitz. Tell them what 5 with Fitz is, Keith.
Oh boy, you are very kind. So I began the 5 with Fitz personally, and I've written it for myself for decades because it helps me clarify my thinking. It's free. It will always be free. But it's literally my stream of consciousness as to how I prepare to invest every single day. And somebody said share it during COVID, and I thought nobody's going to be interested. And today, there's tens of thousands of people around the world who read it, and it's really humbling. And frankly, I love it. You know, I know you read it, Susie, and you've told me you enjoy it, so thank you.
I look for my name in it, Keith.
Yes, you do.
I'm like, come on, mention me. But everybody, I wanted Keith to tell you all about that because we have a lot of new people all the time, and especially on YouTube. And so just every day, check in. Because what I really think all of you need at times like this is a voice of reason, a voice of knowledge, a voice of knowing. And while I'm also that voice, I don't come to you every single day. I come to you on Tuesdays or Thursdays or whenever you happen to tune into the podcast or we decide to do a YouTube posting. So get that little hit every day to keep yourself grounded. All right, Keith, anything else you want to say?
No, just hang in there, everybody. This is tough, but you know what? We are going to get through this. There's no doubt. History shows that very clearly with Susie's guidance, because I read Susie's stuff every week. We're all going to be there in this together.
Yeah, but it could take time.
Yeah.
So just be patient, everybody. This is a market.
Yes.
That's going to take time to settle down. Keith, thanks so much. I call us the dynamic duo. I can't wait to do it again. All right, everybody, click below, like it, and subscribe. See you soon. Bye-bye.